Are you thinking of buying your first rental property? Are you short on funds? What if I told you that the biggest obstacle keeping most people from buying their first rental property isn't finding a good deal? It isn't the market and it isn't even the interest rates. It's money, or more specifically, it's the belief that you need a huge pile of money before you can get started. The truth is that thousands of people buy their first rental property every year without being wealthy. Many of them don't have six-figure incomes. I wasn't making a lot of money when I bought my first house. I was married and the wife wasn't working. Many don't have rich parents just like me. And many don't start with hundreds and thousands of dollars sitting in a bank account. Look at me. I came to the US as a student. I hardly understood anything when I started this business. To be honest, I didn't even know what I was doing when I bought my first rental property. So remember this, if I can do it, you can definitely do it. In this video, I'm going to show you the most common ways real estate investors get the money needed to buy their first rental property. We will cover traditional financing, creative financing, partnerships, house hacking, and several strategies that can dramatically reduce the amount of money you need. By the end of this video, you will have a roadmap to determine which funding strategy is right for you. Also, if you have been thinking of buying for a long time, it is time to switch gears and buy your first rental property. Home prices will increase from here on. Nothing is going to get any cheaper. No! Let's get started. Hey everyone, if you don't know me or are new to my channel, my name is Vikram Chopra. I was an investment banker turned broker in the Greater Charlotte metropolitan area where I live. I invest and assist other investors reach their financial goals through real estate investing in the Greater Charlotte area. Section 1. Understand how much money you actually need. The first mistake many beginners make is that assuming that they need the entire purchase price of a property in cash. Let's say you're looking to buy a real estate property that costs $250,000. Many people think they need $250,000 saved up before they can buy it. That's simply not true. Most investors use financing. What you actually need is usually a down payment, closing cost, reserve funds, and potential repair cost. Depending on the loan program, your down payment might be as low as 3.5%, 5%, 10%, or 20%. Instead of needing $250,000, you may only need $15,000 to $50,000 to get started. Still a significant amount of money, but much more achievable. The first step is understanding the real number you need rather than assuming you need to buy everything with cash. Section 2. Save aggressively. I know this isn't the most exciting strategy, but it's the one that is most effective. You don't want to be borrowing money all the time. Yes, we put down 20% of our money and borrow the remaining 80%. But that 20% is ours, not somebody else. Your skin needs to be in the game. Before looking for fancy financing methods, take a hard look at your finances. Ask yourself, how much money can I save every month? What expenses can I reduce? Can I increase my income? Many future investors spend years thinking about real estate but never commit to building a down payment fund. Imagine saving $1,000 every month. In 1 year, that's $12,000. In 2 years, that's $24,000. Add a tax refund, bonus, side income, or overtime pay, and suddenly you are much closer to owning your first rental property. Success in real estate often starts with discipline long before you buy your first property. Section 3. House hacking. If there is one strategy that has launched more real estate investing careers than almost any other, it's house hacking. I wish I had done this when I got started. I truly do, but I wasn't aware of any of this. All I told a realtor is that I want to buy a house and he got me my first condo. I don't blame him, I blame me. But you, who is planning to get started in this business, are now aware of the trick. So you do it. You only have one chance. House hacking means buying a property that you live in while renting part of it out. Examples include buying a duplex and living in one unit, buying a triplex and living in one unit, renting space bedrooms out, adding a basement apartment, converting unused space into rental income. The major advantage is that owner-occupied loans typically require much smaller down payment than investment property loans. Instead of needing a 20% to 25% down payment, you may qualify for programs requiring as little as 3% to 5% down. This dramatically lowers the barrier of entry. Many successful investors bought a duplex, lived in for a year, then moved out and repeated the process. House hacking can be one of the fastest parts of building a rental portfolio. Section 4. FHA loans. The FHA loan has helped countless first-time investors purchase their first property. An FHA loan allows a qualified buyer to purchase a property with a down payment as low as 3.5%. Now, there are rules. You must live in the property. It must be owner occupied. But FHA financing can often be used for small multifamily properties with up to 4 units. And that's the trick. When I was in university, I was one of the tenants in a fourplex and the owner used to live in one of the homes. He never told me that he's the owner. He always used to say that he's the supervisor. See how people use tricks to hide their identity. I never thought of what he was doing. Today, after 20 years, he's still a friend and he's in many millions. Imagine buying a 4-unit property. You live in 1 unit, the other 3 units help pay the mortgage. That's how many investors get started. The FHA loan program isn't perfect, but it can significantly reduce the cash required for you to buy your first rental property. Section 5, conventional low down payment loans. Many people don't realize that conventional financing may also allow down payments as low as 3% to 5% on owner-occupied homes. Again, if you're willing to live in a property, initially your financing options become much more favorable. A common strategy is buy a property, live there for 1 year, move into another property, keep the first property as a rental. Repeat this process. This strategy allows you to build a portfolio with far less cash than purchasing every property as a pure investment property. Section 6. Use a side hustle to fund your first deal. Sometimes the fastest way to build a rental property is simply increasing your income. The math is powerful. An extra $1,500 per month from a side business equals $18,000 per year. An extra $2,500 per month equals $30,000 per year. Potential side hustles could include consulting, freelancing, online businesses, property management, real estate photography, social media services, driving services, home improvement services. The key is dedicating that additional income specifically towards your real estate goals. Many investors fund their first purchase entirely from side hustle incomes. When you work hard for something, you appreciate it even more. When you invest that money, you will fight tooth and nail to get the best returns. Do you know why? Because now your skin is in the game. I have mopped floors, painted walls, talked to strangers in areas that people fear to go, begged inspectors, being humiliated in court. You think that's easy? No, my investor friend, never. I was an investment banker for 15 years. During the day, I used to wear a suit and work every day. And in the evenings and weekends, every low-level job that you can expect, I used to do it. By the way, if you're a beginner or an investor and are looking for guidance on how to get started in real estate investing, feel free to book a 20-minute phone call with me. Link below in the description. We can go over the numbers together and can come up with an actionable plan. Section 7, partnerships. You don't always have to buy a property by yourself. One of the oldest strategies in real estate is partnering with someone else. Maybe you have the knowledge, the time, the ability to find deals, but someone else has the money. A partnership allows both parties to contribute different resources. The important thing is having clear agreements and expectations before moving forward. Don't get eaten by the other guy. When structured properly, partnerships can help investors acquire properties much sooner than they could alone. Section 8. Private money. Private money refers to funds borrowed from individuals rather than banks. These could be friends, family members, business associates, local investors, retired individuals seeking returns. Many people have money sitting in savings account earning very little interest. If you present a solid opportunity, some may be willing to lend you the money for real estate investments. The key is professionalism. Treat every transaction as a business arrangement. Provide documentation. Explain the risk. Honor commitments. Never assume someone will lend you the money simply because they know you. Trust is built on preparation and execution. Section 9. Sell things that you don't need. This may sound simple, but many future investors are sitting on hidden capital. Look around your house. Unused vehicles, boats, collectibles, electronics, furniture, tools. Storage units filled with items you rarely touch. Many investors have raised thousands of dollars by liquidating assets that they were not using. There is so much stuff in my house that I haven't seen it in years. I definitely don't need all of that. Section 10. Tap into home equity. If you already own a house, you may have access to equity. Options can include home equity loans or cash out refinancing or home equity line of credit. These tools allow homeowners to access a portion of the equity that they have built over the years. That money can potentially be used toward purchasing a rental property, which also means that you're trying to buy your second home at the minimum, so a 20% is needed. Always analyze deals carefully and ensure that the numbers make sense. That's why if you're planning to invest money in real estate, go ahead and book that free 20-minute call with me. We can look at your deal together. Section 11, hard money loans. Hard money lenders focus more on the property's value than the borrower's income. These loans are commonly used by investors who buy distressed properties, renovate them, refinance them into long-term financing, and then sell for a profit. Hard money loans often require a less cash upfront than people expect, but they typically carry higher interest rates and fees. They are tools, not magic solutions, but be very careful. People who borrow are under the thumb of these sharks. Me personally, I would never take a hard money loan. It will stifle me. I'd rather go and work extra and make more money than borrowing from these people, these lenders, these sharks. When used properly, they can help you accelerate growth. Used improperly and they can create financial stress. Section 12, the BRRRR strategy. One popular strategy is called BRRRR: buy, rehab, rent, refinance, and repeat. The idea is to purchase a property below market value, improve it, rent it out, and then refinance it based on the property's increased value. This can allow investors to recover some or all of their initial investment capital. That recovered capital can then be used towards another property. While BRRRR requires education and careful execution, it has helped many investors grow a portfolio faster than traditional methods. Section 13, find better deals. Oh, this is my favorite. I made a whole video on this. Check it out. Here's a secret many beginners overlook. The better the deal, the less money you often need. But why? Because lenders, partners, and investors become more interested when the numbers are attractive. A property purchased well below the market price value creates built-in equity. That equity can open doors that average deals cannot. If you buy a property in an amazing deal, you will still make a lot of money even if you make mistakes. I made so many mistakes, but because most of the homes that I bought had inbuilt equity, I survived. Finding a great deal can solve many financing challenges. That's why if you need some guidance, go ahead and book that free call with me. Section 14, improve your credit score. Your credit score can dramatically impact the ability to secure financing. Higher credit scores generally provide better interest rates, more loan options, lower monthly payments, and greater lender confidence. Before applying for financing, pay bills on time, reduce credit card balances, check your credit report for errors, avoid unnecessary debt. I made a whole video on that. Check it out. A stronger credit profile can save tens of thousands of dollars over the lifetime of a loan. Section 15, combine multiple strategies. Many successful investors don't rely on just one source of money. They combine strategies. For example, saving plus a side hustle, house hacking plus FHA financing, a partnership plus private money, home equity plus conventional financing. Think creatively. Your first rental property doesn't need to be funded through a single source. Often the solution comes from combining several resources together. Conclusion: if you take away one lesson from this video, let it be this. Don't wait until you think you have enough money. Instead, focus on building a realistic plan. Many successful real estate investors started with limited resources. What separated them from everyone else wasn't wealth, it was action. They saved consistently, they improved their credit, they learned financing options, they built relationships, they found opportunities, and most importantly, they got started. Your first rental property will probably feel intimidating. That's normal, but every investor with 10 properties, 50 properties, or 100 properties once stood exactly where you are today. The key is taking the first step. If you found this video helpful, make sure to like, subscribe, and leave a comment below telling me which strategy you plan to use to fund your first rental property. Thanks for watching, and I'll see you in the next video. So until next time, this is Vikram signing off. Good luck, goodbye, and go earn your freedom by finding money to buy your first rental property.